So now let's dive into the market a little bit. So what you got, man? Talk to me about what you're seeing out there.
Sure. I mean, I always talk about, let's talk pre-COVID, post-COVID, because I think that's the dividing line that we're all most interested in. I mean, we were off to a roaring start in 2020, and the market did start to pause, right? I think we all saw that moment where lending tightened up. People just weren't sure what was going to happen. So it was a bit of a panic mode, but we quickly saw investors coming back into the space and saying, you know what? As long as tenants are paying, and they were really seeing numbers that were much higher in terms of collection versus what they were foreseeing, that's what brought the confidence back immediately. So really by May, our numbers started going right back to where we were before and then continuing. So I think the shortened supply, we're all seeing that it's causing buyers to, see less property. So they know that they have to act quickly. So the demand levels we're seeing now are some of the best that we've seen yet. So we're really bullish on what's happening in 2021, where rates are so low. I mean, you can really squeeze every penny out of your investment, knowing that you're paying for mortgage rates that are really unprecedented. So right now, my kind of gut feeling of the market, we're going to keep going down this path. And I think we're going to run into supply issues for the long haul. So that's why working with companies like you and your borrowers, we want to be able to say, how do you manufacture properties? Because it's not like properties just will come on the market easily. But if you can create that flow of properties, we can create the kind of back end system so we can take care of the sales marketing, but you guys are the ones that are creating those properties. So I think we're just going to have to get to earlier in the process, right? Say we want to help sellers develop really the strategy, and we'll give you all the data we possibly can so you can build confidence and say, you know what, Roofstock's my exit strategy of choice. So we want to be able to build those relationships, get more people into fixing and flipping with confidence, knowing that if the market does turn, we know that the rental income is supporting the value of the property. So, with the emotional purchases of owner occupant, sales, you're going to see that for a while. But if the market starts to level off, maybe, people found their homes and there's less owner occupants looking for properties, the investor side, the demand levels that we're seeing are just going to keep on growing as long as the price points don't jump too much. But there's institutional money. There's a lot of pent up demand where people are saying, hey, I want to take my money out of the stock market and put it somewhere where I can control costs, see a little bit more of a typical expected return. So I think we're going to see a lot more investors feeling comfortable with this remote investing. And then we're going to see hopefully a little balance of inventory where, these fix and flippers like yourself and the readily available capital will keep the supply coming to sites like Roofstock. So overall, I feel like this is a very safe place to be. I mean, there's no sure win, of being in the perfect place. But I think seeing what happened in the last recession, when values were going down and, you were seeing losses in some markets, the rental amounts never went down. They didn't dip. So if you're in these properties for the long haul and you're looking at buying and holding, like you were talking about earlier, I think you're in a safe position to ride out this and, take advantage of the low rates, take advantage of some, new markets that you typically didn't have available to you. And now Roofstock's opening up those doors to make those markets available. And I think it's become a global marketplace, right? So, anybody can invest and do it comfortably and do it remotely. And that's just really an incredible change that we've seen move along really quickly throughout COVID.
Awesome. Yeah, I mean, look, single family rental investments is it hasn't stumbled. As you said it well. The collections held very strong. I think we're starting to see it dwindle a little bit. There's more stats coming out on multi than single family. Always, it's easier to get that information. Starting to go down, or maybe 150, 200 basis points less in collections in December and January. But with whether you look at the flight to the suburbs or the lack of a desire to be in multifamily assets, there is a ton of focus in single family rentals. Certainly, there's a lot of fundamentals that you referenced as well that bode really, really positively for it. I'm big in multifamily space. I've never heard more multifamily operators and investors talk more about investing in single family than I have over the last 6 months.